So if I was a beginner to this and I had like a spare $5,000, $10,000, and I was like, right, I want to put this into the market, what would you say is the absolute fundamental basics they need to understand before they put their money anywhere?
So before you put money in, I think you first need to have the basic fundamentals of how the market works,
Yeah.
right? You can't, and the market doesn't work the way you see on social media. You see people drawing lines and all this stuff and these chart patterns. And when you think about it from a deep point of view, right? Big institutions are the ones that move the market, right? The market is also done by a lot of algos,
Hmm.
right? Now everything is high frequency trading. They're not looking at a pattern and saying, this is the pattern that's formulated, so we need to buy more. Or this is the pattern that's formulated, we need to sell more. Algos are operating based on the behavior of buyers and sellers. Well, are buyers more aggressive? Are buyers more seller? Are sellers more aggressive? Are there more passive buyers? Are there more passive sellers? Who is in control of price? They will respond off that, not patterns. So I think most jargon that you see on social media, number one, avoid that.
Hmm.
Avoid, following these patterns. Avoid following basic things that people follow. Like, hey, these are support levels. These are resistance level. I think go into the fundamental of understanding the relationship between buyers and sellers. I would understand the order book. What is the order book? How does the order book work, right? How does it showcase the relationship of buyers and sellers, and then translate that onto a chart, right? So you need to understand the context and then understand the relationship of buyers and sellers before you go on and take on a trade. Now, you can practice all of this on like a paper trading account. So you can go open up an account, take fake trades where they don't like it's just fake money just to practice. So I would recommend someone to do that first for a couple of months
Mm.
and then start with a very minimal amount, even like $1,000 or $2,000, and just start practicing for 4 months, 5 months, and just get familiar with the concepts before dumping in a lot of money.
Yeah.
I think the biggest mistake people make is they open an account, they fund 10, 20, 30,000 looking to make a lot of money and they blow it,
Yeah.
which is what's going to happen.
And how many hours per day do you reckon somebody should spend on the practice period? Because
I think,
I would imagine the more time you spend on it, the better you're going to get. But that's really down to how much
yeah,
spare time you have.
I think the spending time component, I always say this too, where for traders, you will become a better trader by spending more time off the charts than on the charts,
Mhm.
right? What I mean by that is if you do take trades, go and journal them, go and review your trades, go and review what happened here, right? Go and back test some of the strategies, go back in time. So what back testing is for people that don't know, you can go back in time 3 years ago, 4 years ago on an instrument or whatever date it is, and you can play that action that happened. So I can go back to, let's say, 2017 of January 4th till today and play every day, minute by minute, and practice, right? And test that strategy out. So if you start doing those things, it just gives you this massive advantage of just picking up the skill set, getting muscle memory of knowing how price is moving, where price is moving, how it's responding at key levels, what is happening at those key levels, and what is the interaction. So that's where the practice element goes. But I would say, hour-wise, it's all different because you can spend 3 hours and you can consume and learn more in 3 hours than maybe I can. Maybe it may take me 6 hours. So I think
Mhm.
that's kind of contingent on each person.
You mentioned journaling.
Yeah.
You're a big advocate of that. And by journaling, do you just mean at the end of the day, you're just writing down a summary of what has happened that day?
So in one essence, yes, but the whole component of journaling is tracking your data, right? So the idea of tracking your data is if you have a business, right, the first thing you're going to do in every business is you're going to have something like QuickBooks. You're going to have something to see your P&L statement, where you're spending money, where you're making the most money, what your costs are, and so on. In trading, we should do the same thing.
Mhm.
Traders don't do that. Traders open an account, fund it with X amount, and put on trades. And they have no idea what strategy is profitable, under what market conditions. They're not aware of what their faults are. They're not aware of where their mental biases are, because trading is a big mental game. So it's like, hey, what is my pre-market game plan? So before the market opens, how am I looking at the market? How am I evaluating the market? What are things that I need to improve? What are patterns that I'm recognizing within myself? Like one pattern I recognized within myself early on is on Mondays, I would go in with big size, because over the weekend, I would get this weird excitement of, I can't wait to start the week. I can't wait to start Monday and make money. I would take a trade risking more than I should. And then the remaining 4 or 5 days, I would spend trying to make that money back.
Mhm.
Another mistake that I still make till this day is I get very biased on some days. Oh, I think the market's going to go up because of X, Y, and Z. And if the market doesn't showcase me that, I don't change my bias. I get stuck on my bias. And the way I've learned that is by tracking my data, journaling my thought process, and just kind of looking into myself and how I think and how I operate. So I think people also have this bad notion of journaling. It's like, oh, at the end of the day, I got to write in my journal. No, it's actually, reflecting on your thought process and the trades that you have taken and maybe the trades you've missed and why you missed them. And that just allows you to get better.
There's so much psychology behind it.
Yeah.
It's especially if you're the type of person who's just like really cocky and overly confident and just
the market
think,
will
oh,
humble you. Yeah. And I've seen that happen with people. I've seen it happen a lot with people in great professions, right? Like people that move over from, let's say, being a doctor or a surgeon. Like I've had a surgeon in the past that has transitioned into wanting to make trading their full-time job. And, from a surgeon's point of view, it's like, hey, I'm a surgeon. I'm a god. I'm
smart.
I'm so smart. And, you go into trading and it kind of humbles you where it's like, no, you're not. The market is always right. And then you start dealing with your own inner demons of maybe you get too cocky, or maybe you have too much ego, or maybe you get fearful, or maybe you don't know how to take a loss, or you don't know how to be wrong. And these things show up on the charts. They show up on your P&L.